Hello everyone. So today I want to make a video about a stock that I've been buying for a little while and on whose I'm really watching the leaps for 2025 and late 2024. It's a stock that has been absolutely battered by the market as it's lost almost 93% from its peak. It trades now at 244 and it was trading at $35 at its peak in 2021. So really a crazy drop. And that company is Opendoor. And I think the market is wrongly selling Opendoor because it doesn't understand the company and it thinks that the real estate market is going to crash or is crashing. There's rumors that are true right now that Opendoor is going to miss the upcoming quarter by quite a bit and may lose 200 or 300 million dollars because they've been caught in this awful short-term depreciation of the homes that they bought. They've had negative home price appreciation, which their model didn't expect. And so they may take quite a big accounting hit at the next quarter. So that's why this stock may go down a little more in the short run. But over the long run, I really don't think this stock is going to be a problem. I think this may be a generational buy. This stock could be as big as Amazon someday because it tries to disrupt a multi-trillion market out there that has not been disrupted yet, which is the realtor market. So today I'm just going to go over Opendoor and why I think Opendoor is a good bet, especially at these prices. I mean, think about it. You have plenty of people investing in the $30 range in this stock, and that may have been a good price back then as well if the stock can actually become as strong as I think it could become. Also, keep in mind this stock as cash on the balance sheet, $2.2 billion of cash on the balance sheet, and it's trading at $1.5 billion market cap. So if you're a value investor, this looks like a tremendous value. Let me first start by saying that Opendoor is not a home flipper. A lot of people think Opendoor is trying to flip homes. No, they are not trying to flip homes. They're simply, I mean, it's a big task, but they're trying to disrupt realtors. They're trying to disrupt the realtor market. And I think this is a wonderful business. This is a classic 0 to 1 business. The CEO, Eric Wu, is wonderful. If you listen to interviews of that CEO, the CEO has got that classic Silicon Valley disruption mindset, and I think this company could be a winner. So let me briefly introduce you to the company, talk about the value proposition, talk about why it's disruptive, and hopefully you can see my point on Opendoor and why I think it could be such a big story. So Opendoor, I think, and I like to think like that of a lot of my tech stocks, I think Opendoor is right now one order of magnitude better than traditional realtors. If you've read the book 0 to 1, you know that that's what a business should aim for. If a business is one order of magnitude better than anything else, if it's 10x better, then it doesn't need to advertise. People are going to go naturally to that business because that business is so much better. And we do everything digitally today. Why wouldn't we buy real estate digitally? What is the value of a home buyer? What is the value of getting a realtor? At least in that third part of the story, the visiting the homes. Do you really need a realtor to visit the house? Do you really need a realtor to get advice about the neighborhood? Probably not. The millennial generation, the Gen X generation, they are the chatting generation. They don't like to be on the phone. They don't like to talk in person. In general, they like to do everything with an app. That's what Opendoor is. Opendoor, you deal with an app, not with a pushy realtor. It's much better for that. With an app, the big advantage is that you can have the best in the business walking on one experience that then you can expand to every single buyer in the country with no marginal cost. So you can have essentially the best digital realtor, not an amateur realtor like most realtors. Like, this is a fact. Most realtors actually do it part-time. So with an app, you can have an actually best-in-class realtor AI that helps you with your purchase, that uses AI to recommend things to you. So that's much better from that standpoint. A big advantage is that when you buy with Opendoor, Opendoor has exclusive, right? Just like Amazon Prime would have exclusives. Opendoor has exclusive. So There's a lot of homes in many markets, especially in the South, especially in the west of the US, where some homes you can only buy through Opendoor. So if you go for a traditional realtor, you can't have access to that home, and you can't go buy the Opendoor home either because you've probably signed a contract with a realtor. Not with the Opendoor model. The Opendoor model is what I call the model of Uberization, which is you can buy an Opendoor house, and if you buy an Opendoor house, you take the app, you click on visit the house, and the app just lets you in the house without a realtor. If you want to visit a home that's like a traditional home on the MLS, then they use the Uber system where it's licensed realtors who are getting paid $25 an hour, who are driving to you, meeting you into the house, and walking you through the house. You have absolutely no pressure. So, Opendoor, from a network effect, you're going to have more homes because any house can be bought on Opendoor. But not any house can be bought through a traditional realtor. And why would you buy with the Opendoor? Well, this is the most important. This is most likely the most consequential purchase that anyone will make. Anyone will make. And so when you buy with Opendoor, it's only a 3% buyer's agent, 3% fee, which means you get a check. You get a 1% fee from your buyer's agent at closing. So essentially, any home that you buy through Opendoor, you pay 1% less. Now remember, homes, the average price of a home is $307,000 in the country. So $307,000. 1%, that's $3,000. That's a major discount, right? That's one and a half, perhaps two mortgage payments. Uh, and there's more things that they want to put over time. For example, they want to have guarantees on the repairs. You don't know if you buy a house from a flipper. You don't know how good the repairs are going to be. You have to negotiate. You have to go through this very stressful process. You don't have to do that with Opendoor. They want to integrate inspector reports in their homes for customers. So there's a lot of advantages that I think make it a 0-to-1 move for home buyers. But I also think Opendoor is wonderful for sellers, right? So what is value proposition if you're selling a house? If you're selling a house, same way. You just deal with an app. You get an offer in 3 minutes. 3 minutes. You get a market offer. You get an offer at the market, perhaps a little bit lower, but you get an offer at the market, which is not what you would get from a home flipper. A home flipper would try to give you much less, right? Not Opendoor. They'll give you a fair offer based on what they think they can make on their fees, right? You also get the app experience, which is a much more modern, much more sleek experience. Opendoor does the repairs for you. You don't have to do repairs with Opendoor. If you buy and sell with Opendoor, they will coordinate your move out and coordinate your move in. So you don't have to have two mortgage and two moves at the same time, right? You don't have to go for a storage unit in between homes. And again, if you look at what I call the round trip, which is the sell, and the purchase, right? Because most people who sell homes are going to purchase another home. You save 2%. So you pay 5% of a fee with Opendoor instead of 6% if you were to sell your home through a regular realtor. So you save 1% here, and then you get 1% back when buying with them. So you save 2% on the round trip. It's a lot of money when the average home is 307,000. So these are two of the initial reasons why I really think Opendoor could be a generational buy, could be a market-beating opportunity, especially at this price. Let's remember that Opendoor is a fee-based model. They don't hope to do some renovations in the home and go through the hurdle of trying to flip it. They're not a flipper. The home stays on the balance sheet for no more than 45 days, right? They are coming after what the realtors make, right? The round trip is 10% with Opendoor, 12% without Opendoor. In the future, they could even create more savings for their customers, which really makes this business, I think, a no-brainer. They're a true zero-to-one move, a true disruptor. They're the only left. It's important to note that Zillow, which was the only meaningful competitor, left the home buying business. They are the main, they perhaps have 80% of the market. They have a main e-buyer left, right? iBuyer. I think they are extremely well suited for the next generation of buyers, of home buyers, which are Gen Zs and millennials, which are used with apps, right? They are digital natives. Very important, net promoter score of 90%. 90% of people who have dealt with them recommend them. It is very, very high. I have myself sold my home with Opendoor and bought a new home with Opendoor. I did a round trip and I loved the experience. This was my fourth house that I ever bought, and I loved the experience. I will never, ever, ever go for a realtor again. And I think you will find that with a lot of customers who have dealt with Opendoor. Opendoor is so much faster and way less stressful. It is a fundamentally better business model. And keep in mind that the average American moves 7 times in their lifetime. So the total addressable market of Opendoor is tremendous. Again, they are a little bit in trouble right now because they may lose money this quarter. They lost money last quarter. The guidance was very low, but that is a short-term move because their AI has not adapted to the new market. But you can be certain that going forward, the new offers when they make on the new homes will take into account the new interest rate environment. Nobody expected interest rates to go high. To go this high this fast, right? If you go back to Jay Powell at the end of 2021 says they were not even thinking about raising rates, and we've had 4 rate hikes so far in 2022. This is not something that they anticipated. Hence, the drop in their profits and the expected bad quarterly report in the next few weeks. But that is a short-term pain. I think over the long run, they are the category leader in what is going to be a winner-take-most market. And so if Opendoor replaces realtors, if they become the new monopoly of buying a home, which is typically how tech works. Like most tech companies end up being monopolies. If that vision even has, in my view, a 5% chance of happening, it makes a lot of sense to buy the stock. Now, one last thing I'll do is I'll recommend that you go listen to interviews from Eric Wu, and I will put one in the description. And you will see a CEO that is a true 0 to 1 thinker, a CEO that is frugal. For example, Opendoor does not pay anybody in the business more than $120,000 a year. For a Silicon Valley startup, that is very frugal. You will see a CEO that is obsessed with hard times. As the CEO of Opendoor says, Eric Wu, Opendoor was built for hard times, and that is absolutely when they will thrive, I believe. So it is definitely a broken stock right now because the market does not want anything to do with growth, but it is not a broken company. And so I am buying Opendoor. And I think it's a great company. Obviously, none of this is investment advice, but I think Opendoor has a big chance of beating the denominator and beating how fast money is printed. Thank you so much for watching this short video about Opendoor. I hope to cover this stock more. Don't forget to like and subscribe, and I'll see you in the next video.